Hi, and welcome to the Stockscores Market Minutes for June 15th, 2015. This week, I want to talk about the process for profit. Even the very best strategies are useless without the process to identify and execute on opportunities. It's important to define a clear, step-by-step process for putting your strategies to work. Now, when you do this, you need to be realistic about the availability of your time, your motivation. Do you want to trade all day or do you want to just do it on the weekend? Make sure that you adapt a process and a strategy to what works for you. Ultimately, the more mechanical your process is, the more logical and step-by-step it is, the less room there is for error. It's important to write down your process and then execute it regularly on schedule so that you can master the market and ultimately profit. Let's get into this week's analysis. Here is the 30-day, 60-minute chart of the S&P 500. We rallied through the middle of the week and then fell off again on Friday. And not a surprise that we fell down on Friday because the market rallied up to that red line of resistance on this 60-minute chart. You can see that we're essentially in a pennant pattern in the short term. That's a neutral pattern. We've been going sideways with narrowing volatility. We had some big volatility individual days. You know, we had a 236-point day this week. But overall, it's up a day, down a day, up a day, down a day, and the general trend is sideways. And you can see that when we look at the longer-term weekly chart. This market has been grinding sideways for the last 4 months. It's got a slight upward bias, but it's really lost the momentum that we had for such a long time. And that makes me a little bit concerned that we may be on the verge of a breakdown. The Russell 2000 has outperformed the S&P 500 in recent weeks. You can see that we've been ticking higher, haven't quite got through that red line of resistance on this chart, but it looks like the market doesn't necessarily want to go crashing down, but rather money is going to rotate out of those large cap stocks and into the smaller cap stocks. If you are a trader, well, that is good news because it's a heck of a lot easier to make money in the small caps than it is those larger caps. TSX 60 suffered this week much worse than the S&P 500, and it really looks like the sellers are picking up some momentum on the TSX. However, that long-term upward trend line that I have drawn in green has not yet been violated, so this remains a sideways pattern, just some short-term pessimism building. We'll have to see if the market can hold that green upward trend line of support this week. TSX Venture, again, a dead market. You've got pockets of strength. Individual stocks, mostly in the technology area, have been able to do okay, but generally, you know, the commodity-based stocks that dominate this market really aren't going anywhere. Here's the real culprit in the market. A lot of volatility in the bond market because investors are starting to price in rising interest rates. And you can see here again this week, this went down. That means interest rates went up. And until that changes, we should be pretty cautious. Now, what is noteworthy is that we came back from weakness early in the week to come back at the end of the week. We actually closed slightly higher this week on the TLT. So it does look a little oversold. I do think we could see a little bit of a bounce back rally in bond prices, which mean a little bit of a pullback in interest rates in the short term. But looking out longer term, a lot of uncertainty here, and that indicates the market is pricing in higher interest rates in the future. US dollar fell this week. It got stuck at that red downward trend line. We talked about that last week, and it came true. The price of the US dollar against global currencies fell this week. And that's a positive for some of the commodities that we follow, but still there is work for the sellers to do in the US dollar. Look at the volatility, though. We've seen a lot of up and down action relative to the past. You know, look at this chart back in the middle of January here. The range of movement there was very minor compared to what it is over here. So again, the market showing lots of volatility, lots of uncertainty in the currency market. Gold has not benefited too much from the falling US dollar. It doesn't seem like people really care about gold. They're not trying to hedge with gold. And it looks to me like gold is more likely to go lower. It just needs to break that green downward trend line, and I would be much more pessimistic on gold than I am even now. The oil market, stable for the last, say, 2 months. You can see that we've been in a fairly narrow range relative to the range that we had in the fall of last year, much more narrow. That shows that investors are gaining some confidence, but they still haven't broken that long-term red downward trend line. So that means in the long term, the sellers remain in control. In the short term, we're stabilizing, and that is a positive if you are a short-term trader in the energy stocks. And finally, here's the VIX, went to new lows this week. There really is no fear in the market. This thing suffers some decay over time. So even though fear isn't really increasing or decreasing, the price of the VIX actually goes down because it is based on the futures market. And you can see that it is moving to new lows. So I have lowered my long-term rating on US stocks to neutral from bullish, remain neutral short-term. Canadian stocks, I am neutral long-term, lowered to bearish short-term. I do think we're going to test that green upward trend line this week. Bearish on both time frames for gold, bearish long-term for oil, neutral short-term. U.S. stocks continue to languish in complacency with a little bit of a pickup in short-term selling pressure this week. Canadian stocks have felt more selling this week as well, and they appear likely to fall further in the short term. Oil remains stable, but still below that long-term downward trend. The bears are in control of gold, and really there's no fear in the market, which may in itself be a problem. Well, that has been the Stockscores Market Minutes for June 15th, 2015. Have a great week in the market and trade well.